Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on the tech sector. Very interesting day today, and in my opinion, the tech sector is the key to the S&P 500 moving forward. The correlation has been hand in hand since the election, and every time we see the financial sector dragging down the the S&P 500 a bit, because these are the two strongest correlations, the two heaviest influences on the S&P 500, we see the tech sector hold things up time and time again. If the tech sector rolls over here and we start to see consolidation that is certainly due on a weekly time frame perspective, we're going to see the S&P 500 pull back a bit more significantly as well, which is going to take a lot of the high beta names with it, which are all coming off of their all-time highs. So XLK here on the daily time frame, look at the two all-time highs that we've seen here. We saw an all-time high and an all-out dump. Now we have a new all-time high and an all-out dump. We are at the middle Bollinger Band support, which is held 3 days in a row. We held it by 1 penny. If we lose that level tomorrow and break 52.94, we're looking right back down at the low of the dump, and that's down at 52.33. So we have a bearish day today. All momentum is heading to the downside. We saw very, very little bull bounce, and we are looking at the potential for things to start to shift to favor the bears a bit more significantly. And again, we've gotten really complacent here. We're used to this bull move. Look at this move on this chart. I look at this any other time in history before 2017 election, and I say we are extremely overbought and we need to pull back for multiple weeks. We have not seen 2 red weeks in a row since that election. So we are now looking at these exponential supports. We are still in full control. And I want to point that out. This is not, the roof's not on fire. We're not panicking here. We're just starting to notice some very clear signs. And I was looking for those very clear signs the last dump that we did admittedly see a nice strong recovery from. But we are due for consolidation on the weekly time frame, and that's what we're going to be keeping an eye out for. And losing these weekly exponential moving average supports will be a longer-term, clear signal that consolidation is coming. And on this weekly time frame, again, we could pull all the way back to $50, and it would still be healthy consolidation considering where we are coming from. So we have moved up so rapidly that we could fall back very significantly and still be extremely strong. So we are keeping an eye out for a bearish MACD cross, keeping an eye out to see if we close above these exponential supports on the weekly time frame. But tomorrow is all about the middle Bollinger Band and all about that 52.94 support. And I'm going to have my eyes glued to the tech sector when trying to do technical analysis and trade based on the S&P 500 and all those other high beta names. I do believe the key is the tech sector. Apple with an all-time high, nice follow-through from the bull flag confirmation from yesterday, but it's a bearish reversal candlestick with a big upper wick, rejecting from the upper Bollinger Band and closing near the low of the day. We still have plenty of supports to be watching on Apple. I'm looking at 143.01, 05, and 17, building a base just above 143 the last 3 days. So the bulls have that solid support to be watching. If we lose that level, the middle Bollinger Band on the daily comes next in the upper 141s. So key 143 support tomorrow to be watching. A red day will confirm this bearish reversal candlestick and have us looking to test that support. Weekly time frame potentially setting up for another bearish reversal candlestick. We did not confirm the last one. I thought we would absolutely admit that. On the last pullback we saw in the S&P 500 in the tech sector a couple weeks ago, I thought that was the indication that we were finally going to see the consolidation that we were looking for. It did not happen, so I'm looking for that same thing again. And I'm not going to be making, long-term bearish plays. I'm more of a day trader, take it one day at a time. But as of right now, we are looking for a potential bearish reversal candlestick on the weekly time frame to form, and we are looking to lose the 4-period exponential support for the first time since December to indicate that we are in for consolidation. And again, same thing. I look at this Apple chart, and I would look at this, even if it was a penny stock, I would say we are extremely overbought. We need to consolidate pretty significantly. and we have not seen any consolidation on this weekly time frame at all, really. The most consolidation that we did see was right here back at the end of December. Facebook bulls finally seeing some catch up here to the Apple bulls. 1 day laggard in terms of confirming its bull flag and hitting a new all-time high. But the same thing, a big upper wick of profit taking, rejecting from the upper Bollinger Band, favoring the bears heading into tomorrow. We do have support here to watch as well. 140.82, and the middle Bollinger Band is going to be just below that level tomorrow. So in terms of the daily chart, if you're a long-term bull on Apple and Facebook, you can be using this middle Bollinger Band as your guide, as it has been a good guide over the last 3 months, since the election really holding. So if you want to give that middle Bollinger Band, have that be your exit point, that's completely fine. If you're a day trader, you're looking for some weakness in the tech sector. And if you're long, if you're multi-year long, the weekly time frame is going to pretty much have to drop 10% in order for any of these long-term bulls to really be concerned. We can pull back so significantly on these weekly charts and still keep the bulls in full control. We could pull back to Apple 130. We could lose 10% on Apple and still be a really strong weekly chart. Obviously, if we dumped right down, that wouldn't be a good sign, but just in terms of the amount we could give back on consolidation. For Facebook, we could easily pull back. If we were to pull back to the previous all-time high of 133.50, we would still be forming higher lows and extremely strong on the daily time frame. It's a bearish reversal candlestick forming on the Facebook weekly time frame as well. Same thing. 2 weeks ago, bearish reversal spinning top. I thought that would mark the temporary top and we would see some consolidation. It was negated. Very quickly, we could see that was not the case when the bounce that played out in the market and the tech sector was extremely strong in the first couple of days of that following week. So after Tuesday that week, it was very clear we were not going to confirm those bearish reversal candlesticks. We're seeing bearish reversal candlesticks form again. 2 trading days left to go could change the weekly setup here, but we are going to be cautious now as bulls, as the market, it's now up for the S&P 500 bulls to prove to us that they are back in control. So we'll see if we break 52.94 on XLK tomorrow, and if we do, I do anticipate further downside in the S&P 500. Thanks for tuning in. I hope you have a great night. Stop losses on every trade as always, and I will see you tomorrow.